Have you ever wondered why the rich seem to get richer while everyone else feels stuck in place? It's a question many people ask, especially when the wealth gap keeps growing wider and wider. Today, we're going to dive into exactly how the rich get richer, revealing the secret strategies that most people don't know about. By the end of this video, you'll not only understand what's happening, but also how you can start using the same techniques to build wealth yourself. Spoiler alert, it's not magic and it's not luck. The rich simply use their money differently and more strategically than everyone else. Let's pull back the curtain and break it all down. Are you ready? Subscribe to the channel and let's get started. One of the first things that sets the rich apart from everyone else is their mindset. It's not just that they think about money differently, they think about everything differently. Most people focus on solving small, personal problems, paying bills, buying groceries, managing debt. The rich, on the other hand, focus on solving bigger problems. And the bigger the problem you solve, the bigger the reward. Think about it this way. While the average person is worried about making rent, a wealthy individual is building a business that solves problems for thousands, even millions of people. For example, Jeff Bezos didn't just create an online bookstore, he created a platform that fundamentally changed how we shop. Solving such a massive problem led to Amazon becoming a behemoth and Bezos becoming one of the richest people in the world. This is key to how the rich get richer. They're not afraid to think big, take risks, and solve problems on a grand scale. It's almost the same amount of effort to build something small as it is to build something big, so they go all in on large-scale solutions that have the potential to change entire industries. The takeaway? If you want to build wealth, start thinking bigger. Don't limit yourself to small goals. Think about how you can create something that benefits many people. The bigger the impact, the bigger the potential for financial reward. Here's one of the biggest differences between the wealthy and everyone else. The rich always have money ready for opportunities. While most people are stuck in the cycle of spending every dollar they earn, the rich set aside money specifically for investments. They're not just saving for a rainy day, they're saving for when the sun shines, meaning when opportunities arise. Let me paint a picture. Imagine two people. One has $50,000 saved up, ready to invest, while the other has $0 in savings. Suddenly, a fantastic investment opportunity comes along, a property selling at a fraction of its value, or stocks plummeting in a temporary market downturn. Who's able to take advantage of that opportunity? The person with the money. Meanwhile, the person who hasn't saved anything misses out, and that's how the rich get richer. They're prepared for opportunities while everyone else is living paycheck to paycheck. Here's the cold, hard truth. Opportunities to make money happen all the time, but only the people with capital can take advantage of them. It's why the rich are sometimes seen as cheap. They're always saving, always preparing. But it's not because they're stingy, it's because they know that money in hand today means money growing tomorrow. So, what's the lesson here? Start putting money aside specifically for investments. It doesn't matter how much you can save. What matters is that you have something set aside so that when an opportunity comes knocking, you're ready. Here's where the rubber meets the road when it comes to wealth building. The rich buy assets, while everyone else buys liabilities. Now, I know the word assets can sound a bit technical, but it's really simple. An asset is anything that puts money into your pocket, while a liability takes money out of your pocket. Let's take two people, each with $20,000. Person A decides to buy a down payment on a rental property. Over the years, the rent from that property pays for the mortgage, and after a while, it's paid off. That property is now generating monthly income and appreciating in value. Person B, on the other hand, spends their $20,000 on a brand new car and a flashy TV. The car loses value the moment it leaves the lot. And the TV? Well, it doesn't generate any money. In 10 years, Person A has a property worth $200,000 and is earning passive income every month. Person B has a car that's fallen apart and a TV that's outdated. This is how the rich get richer. They buy things that make them more money over time, not things that lose value. This principle is fundamental. If you want to get ahead financially, start focusing on buying assets. Real estate, stocks, businesses, anything that can appreciate in value and/or generate income. The rich understand that wealth is not just about how much you earn, it's about how much you keep and how much you grow. By the way, if you're enjoying the video so far, comment the word millionaire so I know. Now that we've covered the importance of investing in assets, let's move on to the next critical piece of the wealth-building puzzle: spending the interest, not the principal. There's a point in every wealthy person's life where they achieve financial freedom. This is the point where the money coming in from their investments is enough to cover their living expenses without them needing to work. But here's the key: the rich know not to spend the principal. Instead, they only spend the interest. Think of it like this: if you have $1 million invested and it's earning you 5% annually, that's $50,000 a year in income. If you live off that $50,000, your $1 million remains intact, continuing to generate income for years to come. But if you start dipping into that $1 million, spending the principal, you risk running out of money. This is what happens when people inherit wealth and blow it. They see the big number in the bank account and start spending like there's no tomorrow. But the rich understand that the real key to long-term wealth is living off the returns and keeping the principal intact. This is why the rich stay rich across generations. They don't sell off their assets to fund their lifestyle. They use the income from those assets. The lesson? If you want to build and sustain wealth, never liquidate your investments to cover expenses. Let your money work for you, not the other way around. If there's one thing the rich invest in more than anything else, it's financial education. You can't expect to become wealthy if you don't understand how money works. And no, I'm not talking about school education. Most schools teach you how to be an employee, not how to be wealthy. The rich make it a point to learn about money. Think about it. If you want to bake a cake, you need to know the recipe, right? The same goes for building wealth. There's a recipe for it. Knowing how to invest, how to save, how to spend wisely, and how to manage risk. Financial education covers everything from understanding how to invest in the stock market to knowing how to leverage debt effectively. It's knowing the difference between an asset and a liability. It's learning how to maximize tax advantages. The more you know about how money works, the better you'll be at making it. And here's the secret: financial education never stops. The rich are always learning. They're reading books, attending seminars, hiring financial advisors. They treat financial literacy like a muscle. The more you exercise it, the stronger it gets. So, if you want to know how the rich get richer, this is a big part of it. They don't rely on luck, they rely on knowledge. If you want to build wealth, start learning. There are endless resources out there that can teach you how to make your money work for you. We've all heard the saying, you are the average of the 5 people you spend the most time with. Well, the rich take this to heart. One of the most important things the wealthy do is surround themselves with other successful rich people. Why? Because your environment shapes your behavior. If you hang out with people who are constantly broke, guess what? You're going to have a broke mentality. But if you spend time with people who are financially successful, they'll inspire you, motivate you, and hold you to higher standards. Rich people don't just network for fun, they network with intention. They connect with other wealthy individuals who can open doors, share knowledge, and collaborate on business ventures. And let's not forget, the rich help each other. They create opportunities for one another, share tips and strategies, and invest together. This creates a positive feedback loop where wealth grows collectively. On the flip side, if you spend time with people who have a poverty mindset, you'll likely stay in the same place. Your friends might mean well, but if they're not challenging you to grow, then they're holding you back. The takeaway here is simple. If you want to be rich, start building relationships with people who are where you want to be. Find mentors, join communities, and immerse yourself in environments where financial success is the norm. Here's a concept that separates the rich from everyone else. The rich use other people's money to make more money. This is something that doesn't get talked about enough, but it's a huge part of how wealth is built. Let's go back to the example of buying a rental property. Most people think you need a ton of cash to invest in real estate, but that's not true. The rich know how to leverage credit to buy properties. They'll put down 20% of the purchase price and finance the rest through a loan. Then, they use the rent from the property to pay off the loan. Over time, the property appreciates in value, and they've essentially built wealth using other people's money. This isn't just limited to real estate. The wealthy use leverage in the stock market, in businesses, and even in buying other companies. The more you understand how to use credit and loans wisely, the faster you can build wealth. But there's a catch. You have to know how to manage debt responsibly. The rich don't get into debt for liabilities, they get into debt to buy assets. There's a huge difference between borrowing money to buy a new car and borrowing money to buy a rental property. One puts money in your pocket. The other takes money out. The lesson here? Don't be afraid of using leverage, but use it wisely. Borrow money to invest, not to spend. If you do this right, you'll understand why the rich get richer, because they're not playing with just their own money. They're playing with everyone else's too. If there's one thing that sets the rich apart from everyone else, it's their ability to think long-term. Most people focus on what's right in front of them, paying this month's bills, saving for a vacation, etc. But the rich are always thinking 10, 20, 30 years ahead. They make decisions based on long-term gains, not short-term rewards. This is why you rarely see the wealthy panic during a market downturn. When stock prices drop, the average person sells in a panic, trying to cut their losses. The rich, they buy more. They understand that temporary drops are just part of the game, and that in the long run, the market goes up. It's the same with businesses. The rich don't start companies expecting to get rich overnight. They know it takes years of hard work and reinvesting profits before they see significant returns. But they're patient, and that patience pays off. If you want to know how the rich get richer, here's the secret. They're playing a different game. They're playing the long game, while everyone else is playing the short game. If you want to build wealth, start thinking long-term. Don't get caught up in the quick wins. Focus on building something that will stand the test of time. So, now that you know how the rich get richer, the question is, how can you apply these lessons to your own life? It doesn't matter if you're not a millionaire yet. You can start using these principles right now. First, start thinking bigger. Don't limit yourself to small goals. Look for ways to solve bigger problems and create more value. Next, make sure you always have money ready for opportunities. Even if it's just a small amount, having capital to invest will put you ahead when opportunities arise. Focus on buying assets, not liabilities. Whether it's real estate, stocks, or a business, make sure your money is working for you. And when you reach a point where your assets are generating income, only spend the interest, not the principal. Invest in financial education. The more you know, the better your chances of success. Surround yourself with people who inspire you and help you grow. And don't be afraid to use leverage to accelerate your wealth building. Lastly, always remember to play the long game. Building wealth takes time, patience, and persistence. But if you follow these principles, you'll be on your way to joining the ranks of those who seem to always get richer. Before we wrap up, If you ever feel worried about managing your finances, struggle with a complicated relationship with money, or even find yourself sabotaging your financial goals, I highly recommend checking out our video on 12 psychological money problems. Mind over money right here on this channel. Sometimes we're fully equipped with the best mentality and tools to become millionaires, but hidden money disorders can silently hold us back. Whether it's feeling unworthy of wealth, poor money management, or unknowingly sabotaging our projects, these issues can prevent us from achieving our financial goals. Understanding and overcoming these psychological barriers can be the missing piece to unlocking your financial success. So there you have it. Today we learn the strategies behind how the rich get richer. These strategies aren't a secret, they're just not widely known. Now that you know, it's time to take action. If you found this video helpful, I highly recommend watching my next video, which is the perfect complement to this one. Don't forget to subscribe to the channel and share it with someone who could use a little mindset shift in their life. Remember, stay focused, stay informed, and keep building your wealth. I appreciate your support and see you in my next video.